All right, the BITO Bitcoin ETF came out 2 weeks ago, and the question in this video isn't should you own Bitcoin? The question is if you're gonna invest in Bitcoin, should you do it through the BITO Bitcoin ETF or should you just buy Bitcoin directly? Now, first, let me say I am not a financial advisor and I do not know your investment goals, your income, your tax situation, or your risk tolerance. So please keep in mind this is just my opinion and should not be considered financial advice. Now, I think buying Bitcoin directly would make more sense, but I don't want you just to take my word for it. I'll give you the two main reasons why you should not buy the BITO ETF. The first reason being that the BITO ETF doesn't even own Bitcoin. It owns Bitcoin futures. So let's dive into this and first define what futures are. Futures are basically contracts where there's a future price of basically anything. A common example is farming. Let's say I have a farm and I have corn and I want to make sure that I sell all of my corn at a reasonable price so that I can feed my family. But I don't know what the demand is going to be for corn in 6 months. So I might sell a future at whatever the market futures price is in 6 months. So basically I'm agreeing that I'm going to sell someone X amount of corn at X price 6 months from now. And if in 6 months from now, the price of corn is higher than what I agreed to today, well, that lower price is all that I'm getting. But if the price is lower than what I agreed to today, well, I'm still gonna get the price that I agreed on. So in that case, I came out on top. Overall, futures can help a farmer predict revenue in the, you guessed it, future. So the BITO ETF, it invests in futures. Now, within the futures market, they can trade in what is called contango or backwardation. You should Google both of these terms, contango or backwardation. This is a complicated topic, but I think you can get it. When futures trade in contango, it means that the estimated price of each successive month's futures contract is typically higher than the last one. So you're basically buying high and selling low. So when you're investing in Bitcoin futures, which are currently, as of November 2021, trading in contango, what you're doing is you're buying the front month or the closest one, and when that contract is about to expire, they have to buy the next month out. So right now, maybe they would be buying November, and when that date comes, say November 30th, they would have to sell the November, purchase the December, and a month later they would have to roll it over again, so they have to sell December and purchase January. So you're always selling the close one and buying the next month out. That's how you maintain exposure to Bitcoin futures. Well, when the futures are in contango, aka each month is higher than the previous one, then each time you sell November and buy December, you're going to be selling low and buying high. And then when you sell December and buy January, you're selling low and buying high. And what do we want to do in investing? We want to buy low and sell high, not the other way around. That's not how you make money. So when you have ETFs like this that are based on futures that trade in contango, the VIX ETF is a great example. The price of the VIX ETF tends to erode over the long term compared to the price of the underlying asset that it's trying to track.
Okay, I think this is the most important part of the video, so please pay close attention to what I'm about to say. I think we'll really hammer some points home for you. In the bottom left, you see VXX and VIX below it. Now, VIX, also called the VIX, is not an actual investment. You can't buy VIX, but you can buy ETFs that track the VIX. Also, they say the VIX, but it means VIX. So you can buy ETFs that track the VIX. So VXX in the bottom left there is the actual ETF that attempts to track the VIX. So let's see how it did in the last year. This chart shows the last year. The top line is the VIX, and you can see over there in the middle right, it was down 7.62%. Now, the thing you actually own, which is VXX, that's the ETF that's in your Charles Schwab or your Fidelity or your Robinhood account. That's what you actually own, and you're looking to see if it's making you money. That was down 70.46% over the last year trying to track the VIX. And do you know why this happened? Now, this is going to blow your mind. This is why it happened, because VIX futures normally trade in contango. And as of now, November 24th, 2021, Bitcoin futures are also trading in contango. So my point here is that this is what happens when futures trade in contango of a certain asset. The ETF that you own is very likely to do worse than the actual asset it's trying to track. So bring it back to BITO. Again, as I'm saying in this video, BITO is tracking Bitcoin futures, and Bitcoin futures are currently trading in contango.
So if you're trying to get very short-term exposure for like a couple of days, it's going to be close enough. But if you're thinking about holding this for a longer period of time, then it's very likely that you would do significantly worse than the actual price of Bitcoin by owning this BITO ETF. The second reason that in my opinion, I'm not a huge fan of this ETF is that you're paying a fee close to 1% a year, and you're not exactly getting anything special for it. Normally when you pay a fee for an ETF is because you can buy fractional shares or say 500 companies at once with one ticker symbol, but neither of those apply here. And actually what does apply is that you're paying almost 1% a year so that the ETF can buy high and sell low. Now, if Bitcoin stays stagnant, then you're going to erode your value if you own this ETF. And whether Bitcoin goes up or whether it goes down or whether it's stagnant, you're very likely to do worse than actually just owning Bitcoin if you own this ETF instead of just owning Bitcoin. So in conclusion, it makes a lot more sense just to go buy Bitcoin directly if you want to be invested in Bitcoin. Hey, thank you so much for watching. Let me know if you have any questions in the comments below, and see you guys in the next video.